What's going on, guys? Welcome back to the channel. Welcome back to another video. Hope you guys are doing very well here today. So I've been getting a lot of questions about, financial freedom, how to build passive income, how to really build wealth. And I just wanted to take a quick moment and share with you guys a couple of very simple tips and strategies that I think that pretty much anybody can use. And, I've been studying the habits of the wealthy for many, many years. And, even back when I was too broke to be able to afford the book that this information was in, I would literally go to the bookstores and just hang out in there for like 6-7 hours because I was unemployed at the time and I didn't have anything else to do. And I figured, okay, I can't afford these books, but I can afford a little bit of gas money to drive myself to the store. So I'd hang out in the bookstore. I'd hang out in the magazine section, read up, on things of interest, my hobbies and stuff like that. I'm in the cars and working out. But I will also go over to the book section and read up on personal finance, how to invest in real estate, how to invest in the stock market. And I will also learn about like different types of skills. Like I would learn about how to prepare for different certifications and stuff like that so I could learn to increase my income. But one thing that I found really interesting was this author by the name of Robert Kiyosaki, and he would always talk about what and there was this one book called Rich Dad Poor Dad. I don't know if you guys ever heard about it, but it was one of the earliest books I discovered that significantly changed how I looked at money. So anyway, I just want to kind of like share some information with you guys because I learned a lot from that book, and I've learned a lot over the last like 15-20 years about money and how rich people end up using debt to build wealth, and we can do it too. So, basically, we got to understand how rich people accumulate wealth to understand how we can do it, right? So if we study, the habits of LeBron James and Michael Jordan, these are some of the best. These are two of the most arguably best players of, NBA basketball in history, right? So if we studied how they practiced and we studied, the mindsets of these people, well, maybe we would have a better shot at playing the game too, right? So I like to study the wealthy and, consumer spending and its impact on the economy. You got to think about it. 70% of the American economy is consumerism, right? And so this is why when the Federal Reserve is trying to bring down inflation, they will raise interest rates because they know that most Americans have a spending problem, right? And they're not spending money on their assets. They're spending money on liabilities. But this is driving the economy forward, and this raises GDP, right? But the negative effects of this excessive spending by consumers is that most people use credit cards like American Express and, Bank of America issues credit cards. But, your Visa, MasterCards, most people, they're using their credit cards to buy stuff that they don't really need, really. Even if I go through, and I'm guilty of it too. I ain't gonna act like I'm perfect because I'm not. I'm so far from it. If I go through my house, there's tons of crap in my house that I bought over the years I don't need. I like my crap. I like my stuff, but it's not necessary, right? But it's in moderation. Like I try not to go overboard. So if you look in your house, chances are there's like a lot of stuff in your house you could literally put up for sale on like eBay or Craigslist, sell it, make some money, and free yourself of this excess clutter. But that's just most people, right? So, but the problem is that this debt is not making you wealthy. It's not making you rich. It's actually harming you, especially if you're buying, a shirt for like $20 or maybe a $15 shirt, and you didn't pay that credit card off at the end of the month for the shirt that you bought, and now you're paying 22% interest. So now you're getting stretched, and you're paying way more than $15 for the shirt if you keep paying the interest on top of it. So anyway, but if you think about it, if you correctly use debt can actually lead to building wealth. So I just want to talk a little bit about that with you guys today. Maybe share a little bit of my experiences and, kind of help anybody who's thinking about what does it take, how do I do this thing, and how do the rich actually use debt to build wealth, right? So, you got to think about the fact that, when you think about debt, a lot of people, including like Dave Ramsey and Susie Orman, they always try to say, stay out of debt, which is great advice for most people. But rich people tend to leverage the use of debt positively so that they can accelerate the rate of their net worth growth, right? So, this is literally how the rich get richer and wealthier using debt. And the risks associated with debt, because a lot of, debt can be risky, but really, if you think about it, the risk is not really in the debt. The risk is actually in the people, but not the debt concept itself. And we got to really separate the two, right? So if you think about the benefits of leveraging debt, right? It gives you the ability to acquire a large portion of somebody else's resources using a very small portion of our own. So for example, let's just say you want to buy a house and it's like $500,000, right? Well, if you paid cash for it, good for you, right? But think about how long it would take to save up $500,000 working a 9 to 5. Most people are paycheck to paycheck, so it would be very, very difficult to do that. It's not impossible, but it would take a lot longer to save up $500,000 to be able to pay cash for a house versus going into JP Morgan Chase or Bank of America and say, hey, I need a loan, and applying for a mortgage, right? So the banks are willing to give a loan to people with decent credit. Usually 680 credit score and higher can get a loan fairly easily. And if you want a prime credit, if you want a prime rate, then you probably need credit score of at least 740 or higher, right? But the thing is banks are willing to lend that money out because they realize that the home is an asset, and that asset is securing the loan and the mortgage that you would get. So they're okay with it because they're like, hey, if this guy doesn't pay, we'll just take our asset back, right? And so there's that, right? But, this gives you, by doing this, though, it gives you control over the asset without full ownership, meaning you can go buy a $500,000 house. Let's just say you get a FHA loan or something like that. You only got to put down let's just say 5%, right? So 5% of $500,000 is it's $25,000. So think about it. It's a whole lot easier to save $25,000 than it is to save $500,000, right? I mean, seriously, I would think that if anybody seriously wanted to do this, they could save $25,000 in 1 year. And I've done it before, just working a regular job. In fact, I got 2 jobs just to make it happen faster, but I've done it. So I know it can be done. So this is the benefit of leveraging debt, right? It gives you control over assets. And if you decide to use that asset to live in it, let's just say you bought a single family residence and you rented it out in the future. Even if you bought a duplex or a triplex or a quadruplex and you lived in one of the units, but you rented out the other units, you would be the owner of that asset. And so as an owner of that asset, that has debt associated with it, you're now able to benefit from all of the positives of owning that asset while using debt to make it happen. So you would benefit from all of the revenue, from all of your rental payments, all from the tenants that are paying you, the appreciation of the asset, any type of tax related depreciation of the asset that if between the revenue from rent, your appreciation of the asset, and the depreciation of the asset, you could use these assets as benefits, right? And so you benefit from all of these different things, but you wouldn't have benefited until you're 50, 60, 70, 80 years old by the time you save up $500,000, you know what I'm saying? But if you were to use and leverage debt, you get these benefits sooner in life. And so it speeds up the timeline for wealth creation. And through depreciation, a lot of people don't realize this, but you can show you end up being able to essentially show a paper loss on your taxes. Meanwhile, you're profiting on paper. So, or rather, you're showing a paper loss on your taxes on paper, but you're actually having profit in your bank account. And the IRS and Uncle Sam, they're giving you a thumbs up for that. and this is how the game works. This is their game. We're just following the rules, but a lot of people don't understand the game, right? And so, long-term debt positions, they tend to favor borrowers through appreciation and through amortization. Because think about it. The longer you own this asset, generally speaking, the asset's becoming more and more valuable. So that's affecting your net worth. in a positive way. You're getting wealthier as tenants are paying down your property, right? And the more payments you're making on this property, the more of your payment is going toward principal, which is reducing the amount of debt that is owed on the asset, and you're also paying less interest over time. And then, of course, we got inflation, right? Fed Chair Jerome Powell cranking up the interest rates, right? But here's the thing. Inflation's never going away. And they tell us this. In fact, we can look at history and see that inflation has never, ever gone away, especially when you look at the money supply that has continuously increased for since the US dollar was created, basically. But the cool thing about inflation is that it causes many things to go up, including the rents, the amount that you can charge for rent. And this inflation makes your future dollars help pay down the debt that is fixed. So, me personally, I'm not interested in any type of adjustable rate loans or mortgages. I'm not messing with that, right? If you have a fixed rate mortgage, right, your revenue can increase, but your principal and interest payments are staying the same. And so as the revenue from your rents increase, you're able to increase your cash flow on a monthly basis. And this is how the rich are using debt to get richer and get wealthier. And so, think about it. You can think of Fortune 500 companies. They're doing this all the time. They're leveraging debt for growth. Look at Apple, look at Microsoft, look at Amazon, look at Walmart, all these different companies. They are leveraging debt to grow their companies, to grow their net worth, right? They're borrowing money, which is basically depreciating assets, like currency is depreciating. Your dollar, if you just stuck it under your mattress, let's say you take $100, you stick it in a mattress, 2 years from now, 5 years from now, heck, next year, it's worth less. So it's depreciating. But they're taking depreciating assets, which is currency or dollars, to buy appreciating assets. That's a winning strategy. And, if you think about the 3 controllable assets for debt investment, you got, you got self-education. So me personally, I'm a huge fan of investing in myself. I'm going to invest money in training courses to increase my skill sets. High value skills will generate a high income. I can then take this high income to accelerate debt payoff if I choose to, or I can then reinvest that money into appreciating assets and further compound my money. Now, compound interest works, but it can work slowly, or you can leverage debt smartly like the rich do and accelerate the compound interest, the speed of compound interest. All right. And we can also do this not only through investing in ourselves, through self-education, courses, training, getting licenses. We can improve our businesses. If you got a home-based business, I think everybody, in all honesty, I feel like almost everybody should have a home-based business. There's tons of different benefits from doing that. You could hire your kids. I'll save that for a separate video. But real estate, period and bar none. Most people will probably admit that real estate has been one of those asset classes that has created more millionaires than any other asset class. In fact, I would arguably say that real estate probably created more millionaires than even the stock market. And I'm a huge fan of investing in the stock market, index funds, ETFs, all your favorite investment brokerages, Vanguard, Charles Schwab, E-Trade, you name it. Those are great. But with real estate, banks will give you money to buy the asset. Banks ain't giving me no money to go buy stocks. So I'm just saying, I think that it is clearly easier to build wealth faster when you use leverage, but you got to be smart about it, right? So, let's just say you buy a property for $100,000. You invest in real estate, and this is like leveraging debt, right? So you buy a piece of real estate for $100,000. Let's just say that we find a good deal on the property. It's $100,000. We negotiate down through, maybe we find a motivated seller, maybe it's a foreclosure. You get it for $80,000 with a 20% down payment, right? Now, at this point, you have control over the property. You got access to the revenue, you got access to all the appreciation, all the different tax advantages, and the debt pay down, right? Because rental income is going to be used to cover your debt payment. So as long as you're buying properties, you're buying assets that will pay for themselves and then some, it's like, why wouldn't I want to keep doing that? Because eventually the property is going to get paid off. And even as the property is getting paid off, you're building equity and you're building your net worth. And here's the other thing. And this is why I'm not taking my money out of the banks. I'm not leaving all my money in the bank. That's silly, because banks aren't making me money. But I keep a good relationship with my banks because I am going to leverage them in the future. And I'm already leveraging them now. But if you think about it, you got all this control over the assets, appreciation. And think about it, you got the national housing appreciation rate is anywhere from 2 to 5% across the United States. Meanwhile, your principal pay down after 3 years is, heck, even after year one, it starts rapidly accelerating. And then, your increased equity position throughout, the period of time that you're owning this property, like you're literally just leveraging debt. And these are the types of conversations that the rich have with their kids, So I think it's really important to understand debt usage, how to protect yourself, and just some of these basic strategies that the rich are using, how they're leveraging debt to build their wealth. And these are like simple strategies that we can do too. Now, I'd love to hear from you guys. By the way, if you're new to the channel, consider subscribing to the channel, drop a like for the video. I totally appreciate that. But let me know if you guys got some value out of this one. I'd love to hear from you guys. Drop me some comments down below. By the way, you should see some videos here and here. Definitely check out my next videos, my previous videos here and here. Let me know what you guys want me to cover in future videos. I hope you guys got some value out of this video. And I hope to see you guys continue to make progress on your goals. You guys be safe.